So I put together a quick video just to show you the power of Confluence. And in this particular example, you don't have to understand how to draw Fibonacci retracements, how to draw channels, or how to identify supply and demand or support and resistance. So all we're going to have on the chart is the red lines, which are big round numbers, institutional numbers that you can easily draw yourself. Here I have one at, this is the Dow, by the way, at 3,500, 3,600, 3,700, 3,800, 3,900, 31,000, so increments of 100. And then we have the white EMA, which is the 200, and the yellow, which is the 21. So those are the, excuse me, those are the only three things we're going to use besides a couple of price action patterns. So if you don't know what a pin bar is, you can go and look that up, but I'm sure we'll come across a few examples here, and I can kind of point it out. They're really easy to spot. And then morning and evening stars, which are also pretty simple to spot. And we're just going to use those three price action patterns. So I scroll back on the 89 tick chart here to as far as I could go, which is the 13th. So today is the 18th. So we're going to have about 6 days worth of data here to look at if we go through all of it. So go one move over to the right here to kind of, I don't know why the tick indicator does that to the very first set of data where you can't really read it. So we'll go to the right, one click here, and kind of get everything back to a normal look. All right, so if we're looking for shorts, which is kind of the market we're in right now, so we'll look at that first. The yellow EMA, or the 21, must be below the white EMA, okay? So that, for the purposes of this illustration, this is signifying a downtrend for us. We have the yellow 21 below the white 200. So no matter what else we consider or look at, this is the only thing that's going to tell us if we're in an uptrend or a downtrend. Okay, so, and we have the benefit of hindsight a little bit, right? We can already see that price continued to go down. So because like here, you do have these consolidation type periods where you could easily get whiplashed here. However, we're in a downtrend right now. And what we're going to look for is a pin bar or an evening star that rejects one of these big round number lines. And then that would be, at the close of that bar, that would be reason for entry. One thing I should note, and this just comes with time, and again, you've heard me mention on prior videos, how using a tick chart lessens the learning curve when it comes to reading price action, structure, and all that. Will also help you with identifying chop or consolidation, as you call it. Like right here, you can see the 200 EMA is just pretty much just flat. It's almost parallel, right, to these horizontal lines. So this right here tells you that you are in a consolidation period, and you might want to stay out of the market. And then, when it gets over here and it starts kind of getting that angle to the downside again, kind of pointing down, then you could, start looking at maybe looking for short trades again. But again, this just comes with practice, and again, it's easy to tell right now, right? Because everything is here. You don't really have a hard right edge of the chart right now where data is not visible. So again, hindsight makes it all easier. Okay, so we'll just start here, and again with this, we're going to say we're in a consolidation period, so we're not really looking to enter here. We get over here, the yellow crosses below again, and now it's significantly below, and we're starting to get a down slope to the white 200 EMA. So if we just kind of watch price, it comes down, reverses, comes back up. This is a pin bar right here. This would be a bearish pin bar. I don't have a specific definition for you. I mean, one guy that I follow on YouTube I think he'll tell you that all of the body of the candle should be in the lower third of the candle, which this obviously is. If you just look at the colored in part, That's your body, and it obviously is in the lower third of this candle, and it closed, um, you know, at the right here at the extreme lower part of the candle almost, right? So this is probably in the lower fifth, certainly in the lower fourth of this candle. So this is a bearish bar all day long. And actually what you have here, if you look at this, is an evening star pattern. Now I'm not going to get into the details of that, but these three candles here, here, and here make up an evening star pattern. But we're not, you know, for the purposes of this illustration, we're not interested in entering here because while we did reject the non-EMA, we're only looking for trades that reject the big round numbers, okay? So we come back down, come back up again, don't really see, you know, nothing here is rejecting the big round number, the red line. We come back down, we come back up, and then look what we have here. We have again almost a spitting image of this one, except it's a true bearish bar. It closed lower than the open, and it's, you know, if we're going to say it's the lower third, the body is certainly in the lower extremity, the lower third of the candle. Not only did we reject the big round number, but we also rejected the non-EMA, and then this other little support resistance area I have here. Which I don't want to take off at this point, but we're not really considering that for these trades. So, so at the close of this candle, could be an entry for you, right, to the downside. Now, I've not tested this. This is just an illustration of how Confluence can help you find good trades to enter. You know, Confluence number one is we have the 200 EMA. Price is below that, right? Confluence number two, we have the non-EMA that's below the 200 EMA. So that's Confluence number two. Number three is we have this pin bar, bearish pin bar. Number four, it rejects this big round number. And number five, it rejects this non-EMA. So you have 4 or 5 reasons here. And again, you know, trading is all about probabilities. And this is, you know, depending on what you're looking for, this could be a high probability setup for you. So, but this is something you would have to go back and test over, you know, days and days or weeks and weeks of back data, just scrolling through the chart to see how they worked out, to see if it would be something you'd be interested in scalping or trying to get put a stop loss above this structure and shoot for a 1.5 to 1 risk reward, which you can obviously see that would be the case here. If we entered right here in this general area, we would have a stop of 42, and we went all the way down to 13. So, you know, one little better than 1 to 3 risk reward ratio. So moving on. So based on our rules, that's a good entry, and it worked out well. Come on down. No sense in looking at any of this because we don't have a big round number anywhere in this area. So we come down, we break below. This is a nice rejection. I don't know if this were the system I was trading. You'd have to go back and check and see. This is certainly a bearish bar, a very bearish bar, and it did reject the big round number. And we can see that it worked out. Not for a 1.5. If you're saying your stop's going to go above structure and you're looking for a 1.5 to 1, I don't believe you quite got a 1.5 before you got stopped out. Yeah, over here, this little wick probably would have gotten you. But nonetheless, a bearish bar. So let's keep rolling and look for some more pin bars here. So we have nothing here. So right here, another good setup based on our rules. Here's a nice, again, even though this is a bullish open, bullish close, price closed higher than it opened. This is a bearish bar all day long, once again, a bearish pin bar to me. So again, we meet this rule. We have the whites, the 200 EMA sloping down. We have the yellow EMA below the white EMA. And then we have price come up, make a nice pin bar rejection of this big round number. And again, added bonus is it rejected the 21 EMA, the yellow here. And then we had a nice little move to the downside. So, so there's a second trade. Let's come back over take a look here. Nothing really going on here. This is a doji. You know, it worked out, but I wouldn't. I don't consider these bullish or bearish. I wouldn't really be interested in trading that. Now this one here, absolutely. Again, if we say the rule is the lower third of the candle, it's questionable. You know, you'd have to get out a fib or something and measure it. It's certainly close, but nonetheless, this is a nice little pin bar. So there's another entry for you that meets all the rules, and you have, you know, it's rejecting again the 21 and the big round number, and again, you know, certainly good for a scalp. Not for a 1.5 to 1 though if your stop is up here. Here's another one that just barely wicks the big round number. You can see how powerful these levels are, these institutional levels, just all the wicks that you see hitting and rejecting across this line here. Yeah, I mean, again, a great scalp. That's probably 10 to 11 points on a scalp. It's not going to work out on a 1.5 to 1 though. Kind of questionable here, and you know, if you can't see the right hand side of the chart, you know, we can see that you would have gotten a good scalp out of it. If your stop went here above this little area, yeah, maybe you get a 1.5 to 1. Not sure, but obviously, you know, this is where price turned and went back the other way. But you know, again, I only scalp. I typically don't look for much more than that. So if I were setting up a plan to scalp, you know, 4, 6, 8 points or whatever, this would have been a good entry, and we would have cleared, you know, all up to 8 points easily there. So moving on. So now, it's where you want to kind of be careful, because we've got a crazy strong bullish bar here. Price comes back up, retraces a little bit, and now we're wicking the 21 EMA from the top side. So, however, you know, yellow is still below white. Price, however, has broke above the 21 EMA very strongly. So, you know, and besides, the rule is yellow below white, we're looking for bearish trades. Well, there's no red institutional level in here that we're using anyway. So let's move on over. Here just for a second, it popped above, but there was no trade set up to go long here. So now we're back in a little bit of a bearish market. However, look again, you know, we're kind of flat, kind of in a range a little bit. We do drop down, but there's really no reason, there's no good pin bar that I see here to consider an entry. So we would have survived that little area there by not making a bad trade. Again, no red institutional level to wick. Come back down. Okay, so here's a pin bar, and we have yellow below white. We have the pin bar rejecting the red institutional level. If we enter below the close of that bar, great scalp. If your stop went here for a 1.5 to 1, looks like you would have been successful there as well. So now we're back again. You can kind of tell we're in consolidation, and you know, your EMAs are kind of flattening out somewhat as well. So, you know, again, if you couldn't see from here over to the right, you know, would you enter a trade on this? It's very possible, but if you're really, you know, if your eyes are trained to look for this flat EMA, and then you have a flat EMA here, and not only that, you can clearly see, well, I don't want to do that. Yeah, let's do this. It's gonna, how this is gonna work out. That, you know, right here we're in somewhat of a range, right? This whole, you know, there's not really any movement up or down in this whole area. So probably, again, something that you would not want to enter. Here's a good one here. we came back up. Yellow is below white, and we had a nice bearish pin bar here, rejecting the 200 EMA, as well as a big round number. And then what happened? Boom, price just fell like a rock. And this certainly would have given you a 1.5 to 1 easily if you were doing your stop above here, well, even above here. This is probably the more accurate structure level here. If you remember where I've talked before about what defines a turning point in the market or an area of structure, and again, this is just me. It doesn't mean it's right. It's just what I use to identify. You have a high, and you have at least 2 lower highs on the left side and 2 lower highs on the right side. So to me, this is, that's an area of structure. A stop could possibly go up here. We come back over, possibly. It certainly would have worked out for you. That may be the lower third of the bar. Kind of hard to tell with the eye test. If your stop went here, it would have worked out. If your stop went here, depending on what you're looking for, good risk-reward ratio. No way you get 1.5 to 1. But again, this is great this would have been great for a nice little scalp. So come on down. That's a doji, so we're not interested in that. Another doji, no interest. That one's questionable. I mean, the body is over the line, so it doesn't really meet the rules. So worked out, but that's not one we would enter based on our rules. So we're at about 16 minutes here on this video. So I believe you get the idea. You can see how successful just, using the data I had at hand, how well it appears that trading strategy would work out, certainly for scalping. But again, if you wanted to try it on demo, you would need to go back and back test it for a little while. Whether it's on a tick chart, 4-hour chart, 1-hour chart, again, price action is price action. And then for bullish, it's just the exact opposite. Yellow above white, and then we're looking for a pin bar rejection like this of the red institutional level to the top side. So we have a bullish pin bar here, and it rejects the institutional level, it rejects the 200 EMA, and then price took off to the upside. Let's see if we can find one more. We've been in such a bearish market recently. It might be a bit of a challenge to find several bullish opportunities. Yeah, we're right back in a bearish. Let's scroll till we see there's a good bullish trend. So let's see. So nothing there. Oh yeah, there is right there. So again, yellow above white, institutional level. And this is not part of this trading strategy, but a strong push down like this, these two bearish bars relative to everything else that happened over here and all are fairly strong. So it was a final attempt by the sellers to continue driving price down. They weren't able to do it. You had a nice little inside bar here, and then none of that really matters for what we're talking about. But again, as you learn to read price action, that can be a confluencing factor as well. So so you've got a pin bar here rejecting the big round number, and then boom, there you go. See if we can find one more. This is a doji, so it worked out, but again, doji is neither bullish or bearish typically. Nothing on that institutional level. So here's one here. Now this is one that would not have worked out, right? Unless you're looking for a 1.5 to 1. This certainly wouldn't have worked out for a scalp. We would have been stopped out, but it's a great bullish pin bar. And it's on an institutional level. Yellow's above white on the EMAs. But let's see where our stop would have had to have been. I mean, best case scenario, our stop would have to be right here, below this little consolidation area. And even safer would be below this big round number. But let's just see how this worked out. So if we entered on the close of this pin bar right here, so right around in this area somewhere, and let's say our stop was down here, yeah. That's 98.27. Yeah. It looks like we go back over here. It looks like we're starting the downtrend again. So 98, yeah, you're not even close. So that one would have been a definite loss with either a scalp or a 1.5 to 1 risk reward ratio. So you get the idea. So now you talk about adding trend channels, Fibonacci's, and other price action tools, are tools to help you gauge good entries, chart tools, and chances are some of those are on a fib level. They're at the top of a trend channel or the bottom of a trend channel, a trend line, a supply or demand area. But just using what we talked about, you could formulate a good trade plan around just that. So I hope you found this helpful, and if you have any questions about what I talked about, just leave a comment, and I'll be glad to get back with you when I can. Hope everybody has a blessed day.